Chris Hart is in studio now to explain why the copper price is crashing. A difficult question to answer, or is it really, when you take a look at copper,
Yes.
oil, is it driven by China?
Well, I think the one thing is that you had quite a bit of difficulty in getting the supply up, because that was quite constrained. You didn't have good investment. You've got some supply coming on because of investments. These have long timelines, so the supply is coming in as China is slowing. And I would suggest that when we say slowing, China may well have slowed to a lot lower growth than what is being penciled in.
You mean well below 7%?
I think it may well be well below 7%. If you
Sure.
think, electricity consumption is not growing, that really is an indication that you don't get static electricity consumption, on the back of 7% growth. It's as simple as that, and there's enormous stockpiles as well. And in addition, the smelting of these things are creating environmental problems. So whether it's iron ore, whatever, you're seeing China looking to rather look for scrap and that kind of thing to try and boost their demand. And as I say, lots of investment in China that is malinvested. So that was great in the good times. These are now going to be the difficult times. Linked to that is, of course, oil. Again, both oil and copper suggesting that demand is dropping off, and you've got the surplus capacity that's been built up. It's not only that, because you've got debt problems behind that. A lot of new production in resources as a whole, but particularly oil and that, came off the back of zero interest rates funding frackers and that. And they, of course, have their debt. People use those debt, which is bonds, as collateral for other things. So as usual, the Americans have created a debt daisy chain, on top of it. So they don't just drill a well, they put some debt on top of that, and they rehypothecate it. And so you've got a bit of a risk sitting in the financial system, I think, coming through. So one has to be watching a few things to see, are there any other warning signs? Subprime debt, what are those yields doing, for instance? Starting to see signs of that ticking up. Certainly they will tick up a lot more, because the oil industry, once the hedges run out, will not be able to sustain itself at these prices, for example. We've got to see also signs. Look, today's retail sales in the US, shocking, because that was effectively the December retail sales. You would have expected, after 3 months of enormous fuel price cuts that you've had there, that the consumers would be, quite in a robust position to really go shopping. And here we get a negative number over the Christmas spending period.
For the Fed, does that mean they're going to use a wait-and-see approach now?
I still think that if there's another crisis brewing because of remember, the huge move in the oil price has created problems in your derivative markets. There's some people who would have gained, but there's some people sitting underwater. And if those people don't meet their obligations, the people who've gained then don't get what they thought they were getting, and they then might be sitting on the other side of a trade, which it becomes a bit of a daisy chain.
Sure.
So you may actually well see not interest rate hikes, but you may well see QE fall instead. But this is a long way to go before one can actually say, okay, this is where we're going to be going. But I have a funny feeling there's no interest rates that you can move. They're already at zero. So maybe even the US will consider negative interest rates, but
if the global outlook then is just so negative, China slowing down below 7%, the Eurozone as well with its own issues and quantitative easing, the US, as you mentioned, potentially not making a move on interest rates. What does this mean for a country as tiny as South Africa?
Well, it means that we've got to actually look more to what's happening internally. Our low growth problem we did to ourselves.
Eskom?
Okay. Eskom is an example of that, but there's other policy issues that have been running particularly since 2008, which is imposing costs, the regulatory mistakes, the tax mistakes we're making, the strikes, all of these things we did to ourselves. We can actually, in a sense, weather it if we solve our internal problems, but that's
not going to take.
That may not be likely, but the potential is still here. The other thing that is shown in the last few weeks is that precious metals have been holding up. They haven't followed the rest of the commodities cycle down, and that would also be an indication that there's some problems brewing in the financial services sector that's just starting to reflect in the precious metals as an alternative hedge to financial instruments that may play out, and that will also help the South African economy if those sectors which have really been bombed out and unpopular, they start coming to the fore as money gets pulled out of other markets and these markets start to show signs of positivity, and it actually starts to attract, we could actually still, hold on to some money.
So there's hope, but
there is very much
the
so, but we
fundamentals
have to
need
get
be
these
sorted
things
out.
strong. Yeah.
Exactly. Chris, such a pleasure having you with us today. Thank you so much for coming through. That was Chris Hart, who's the Chief Strategist at Investment Solutions.